So when we are speaking about multi-product calculations, so there are two products here, because when you speak about multi-product, it can be more than one product, right? So there is a bakery. A bakery produces two types of cakes, a round cake and a heart-shaped cake. So this is a round cake and this is a heart-shaped cake. The total fixed cost for the firm are $92,000. So you should be knowing that fixed cost is common for both the products, right? Now, only what will differ is the selling price, variable cost, right? And the number of units what they want to sell. So selling price for both the cakes are given, variable cost is given, budgeted sales are given. How many cakes will be required to reach the break-even point? So they are asking you break-even point, right? What's the formula for break-even point, Samrin? Fixed cost by contribution. But the question here is taking into consideration both the products, you have to find out the break-even point for both, right? Hello.
Yes, sir. Hello.
Yeah, you have to find out the break-even point for both the cakes, right? Hello.
Hello.
Yeah, can you hear my voice?
Yes, sir. Yes.
Yeah. So you have to find out the break-even point for both the cakes. Am I right?
Yes, sir.
How will you do that? So see, contribution what we are taking here. Okay. There are like the total fixed cost is 92,000. Okay. And okay, we need to find out the break-even point. Okay. And budgeted sales units are 10,000 and 15,000. This is budgeted sales units. Okay. So we will take the single one. It is 92,000 divided by, just a second. Fixed cost by contribution. Just 2 minutes. Just a second. Fixed cost 10,000, 10,000, 10,000 by 25,000. Just a second, I'm doing some calculation. Okay, so we need to check like in the total sales, how much is each cake's proportion. So 10 divided by 25 into 100, that is 40% round cake, 60% heart-shaped cake. This is the total sales volume. That means in the total sales, round cake is 40% and heart-shaped cake is 60%, right? So now fixed cost by contribution. If I want to take the contribution, so fixed cost by contribution is break-even point. But what we need to do here first and foremost is, one thing we know that unit contribution margin. So 12 minus 8. Okay. Yeah. So what we need to do is, yeah, 12 minus 8 is 4. So your contribution would be 4 for the round cake. And it will be like 6. It will be 5 for the sponge cake, right? Sales minus variable cost. Sales minus variable cost. The point here is your fixed cost is common for both the round cake and heart-shaped cake, right? So you cannot find out separate break-even points for both by taking the fixed cost as separate figures and the contributions for each and every one. For example, if I want to find out the break-even point for round cake, it is not that I can take the fixed cost here and take the contribution here, and I can take the fixed cost here and take the contribution there, and I can get the answer. That's a wrong way to do. Why it's a wrong way? You really understand that both the cakes are made in one factory itself, right?
Yes, sir.
And both have the common fixed cost. When both have the common fixed cost, both will have a common contribution margin.
Yes.
When both will have the common contribution margin, then we have to apportion that based upon a ratio, based upon the contribution ratio, right? So how will we do that? First, we'll find out the unit contribution margin. So it is very simple. Weighted unit contribution margin. What is that?
Weighted unit.
Very simple. We will take the proportion of each and every one. The proportion of round cake is 40% into its contribution plus the contribution here is 5 and the proportion is 60. Correct?
Yes.
What is the answer?
So how we got 40%?
See, this is the sales are 10,000 and 15,000. So total sales is 25,000. 10,000 and 25,000 is 40%. 15,000 and 25,000 is 60%, right?
Okay.
Yeah. So we have to find a unit contribution margin when it is a weighted average unit contribution margin when it is a like multi-product break-even point we need to find out because the contribution is common for both, right?
Yes, sir.
Yeah, okay. 4.60. Now we can get the break-even point. Break-even point is fixed cost by
Contribution.
weighted average unit contribution margin. So tell me what's the break-even point?
20,000.
20,000. So 40% goes for round cake and 60% goes for heart shaped cake. So it is 8,000, 12,000. Can I say this is the answer? Yes, right? Just note it down. Once done, you can inform me, Samrin.
Done.
Shall we move forward? So then a company sells two products. Product A provides a contribution margin of $3 per unit and product B provides a contribution margin of $4 per unit. If the sales mix shifts toward product A, which one of the following statements is correct? So here the contribution margin of A is 3 and the contribution margin of B is 4. Sales mix is shifting towards A. It has a lower contribution margin, right? Yes. Hello.
Yes, sir. Hello.
So here the lower contribution product is A. That is dominating the sales mix, right? Because sales mix is shifting towards product A. So the contribution margin will decrease, correct or wrong? Because the unit contribution margin is less, correct? So, so what will happen? Like contribution margin will decrease, right? The contribution margin here, the contribution margin is 3. It is less. So now, so here what is happening? The number of sales units remains constant. Overall contribution margin and operating income will decrease. Why? Because see what is going to happen. Let's say $10 is your selling price. Okay. company A sells two products. Product A is giving us $3 contribution and product B is giving us $4. So this is having more contribution, right?
Yes, sir.
So what will happen if, let's say, you don't have any interest in anything, interest cost and anything, this becomes your operating income. It is decreasing or not?
Yes. Decreasing.
Yeah, if you are selling the total number of units which is constant, let's say you are selling 1000 units here and 1000 units here. Okay, let's say the selling price is same. Here you have a higher contribution, lower contribution. So here the operating income will decrease when the number of units sold is constant. Correct or wrong?
Yeah.
So this is the option.
Okay.
Right? This is wrong because the overall contribution margin ratio will decrease, right? Because it is shifting towards a lower contribution margin providing product. Contribution margin ratios for product A and B will change. How come? It is not going to change because the sales is constant. Total number of units necessary to break even will decrease. If it is towards A, the total number of units necessary to break even will increase or decrease?
Decrease.
No, it will increase, right? If the contribution margin, see, let's say if you are able to break even at how many units? 1000 units. What's the formula for break even point in units? Fixed cost by contribution. Let's say fixed cost is $1,000. So your operating income is less. Here it is more. 250 and 333 something, right?
Yes.
So total number of units to break even will increase or decrease?
Increase.
Increase. So this is a wrong statement. Shall we move forward?
Yes.
Company with 280,000 fixed costs as the following data. Product A, product B are given. Assume 3 units of A are sold for each unit of B sold. That means if B is 1 unit is sold, A's 3 units are sold. How much will sales be in dollars of product B at break even point? How to do this question? Just read this once. Okay, so A has fixed cost of 280 and these are the data given. So here the contribution is 2, 1. Assume 3 units of A are sold for each unit of B sold. So now we will try to find out, since product, we'll try to find out contribution margin, right? So how we can do that? So previously also it was 60 and 40%, right? So 1 unit of B is sold, 3 units of A is sold. So total 4, correct? So A has 75% and B has 25%. You agree or not?
Yes.
Hello?
Yes, sir. Hello.
Agree, right?
Yes.
So yeah, so 2 into 0.75 plus 1 into 0.25. Can you tell me what's the answer? No.
2 into 0.75 plus.
Yeah, 3 into this. It is going this way. Unit contribution, they have told given the units, right? They haven't given the number of units in sales. 2 minutes, I'm just checking. No, see, it's not going to be in this way because this is 3 units are sold here, 1 unit is sold here. So we will take the number of units and their contributions to get the contribution margin, because there we took the weighted average contribution. Here we are not taking that. Here we are taking composite contribution margin. Okay, because if number of units are given, we don't know the total number of sales, right? Hello.
Yeah. Yes, sir.
See, we only know the number of units. If 1 unit of this is selling, 3 units of this will sell. But we don't know totally how much they are selling. So we can't find out the proportion of sales. Can we do that? See, if 100 units are sold, then we can try to get an answer out of this, right?
Yes.
Then we can say that 25 of B will be sold and 75 of A be sold, but we don't know how much is the total volume of sales. So how come we can find out the weighted average unit contribution margin? We can't find out. So we'll find out the contribution margin based upon the the units, number of units that they are selling, not with the proportion. So 3 into 2 plus 1 into 1. So how much? 7, correct? Yes. Hello.
Yes, sir. 7.
$7 is your contribution. Now we will find out the break-even point. This is the common contribution. So your fixed cost is 280,000 divided by 7. How much is the break-even?
40,000.
Right. Now, $40,000 units. What are they asking? Assume this particular scenario. How much will sales be in dollars of product be at break-even point? So at this point they can break even, right? So how many units? What is the selling price per unit? 6. How much?
2,40,000.
Yeah. Okay. Please note it down. We'll move forward. Yeah. Next. Firm produces 3 inexpensive socket wrench sets that are popular with do-it-yourselfers. Budgeted information for the as follows: model, numbers, selling price, variable cost, estimated sales volume. Total fixed cost for the socket wrench product line is this. If the company's actual experience remains consistent with the estimated sales volume percentage distribution, and the firm desires to generate total operating income of this much, okay, how many model number 153 socket sets will the firm have to sell? They're asking. Please read the question properly. So there are 3 inexpensive socket wrench sets, right, that are popular with do-it-yourselfers. Budgeted information, that means they have estimated all this. They have 3 models. They have the selling price and the number of sets they want to sell. All they have given here. All the data is given. Total fixed cost is also given. Company's actual experience remains consistent with the estimated sales volume percentage distribution. And firm desires to generate a total operating income of this much. How many model this much will the firm have to sell if they want to generate this operating income? Now, did you understand the question?
Yes, sir. Yes.
So first and foremost thing is we will see how much like is the the estimated sales volume is given, right? We will see the ratio of each and every models like number of sets, the ratio of number of sets of each and every model. So it comes out 30 is to 75 is to 45, correct? If I want to convert this into percentage, and how I will do, I will add all of them. 75, 45, 150. So 30 by 150 into 100. So it comes around 20%, right? So 20% is the percentage of 109. 145 percentage would be 75 by 150, 1 by 2, 50%. And number 153, 45 by 150, sorry.
30%.
30%. So we got the percentages. Now what we'll do is we'll find out the unit contribution margin. Weighted unit contribution margin, because we have the proportions, right? We have, right? Because we know the total number of sales. Isn't it so? This one we just see, instead of going for all big numbers, we directly took the ratio and directly are finding. So sales minus variable cost is contribution. Can you tell me how much? 4.5, I think. 7, 6. 4.5 into 0.20 plus then what? 7 into 0.50 plus 6 into 0.30. Can you tell me the weighted average unit contribution margin?
6.2.
$6.20, right? What's the total fixed cost? 961 divided by 6.20. Can you tell me what is the like break-even point?
1,55,000.
No, sorry, because here there is something else also, right? They have a target income also. So fixed cost plus target income. Desired profit is there, right?
Yes.
Hello?
Yes, sir. Hello.
Yeah, so what is the desired income and divided by the contribution? What is the answer for this?
9,87,000.
What? Just once again you add and tell. First you add the numerator figure, Samrin.
1,81,000.
1,80,000. Ah, yeah, 1,81,000. Now they are only concerned with product number 153, right? So 30% of this. Can you tell me the answer?
54,300.
Okay, just make a note of this. After finishing, tell me, we'll go for the next. These are good questions and lengthy ones.
Done.
Next. Multi-frame company has the following revenue and cost budgets for the two products. These are the plastic frames and glass frames given. Okay. The revenue and cost budgets, because they have given per unit selling price and all the variable costs. They have given the number of units as well. Budgeted unit sales equal the current unit demand, and total fixed overhead for the year is this. Assume that company plans to maintain the same proportional mix. In numerical calculations, multi-frame rounds to the nearest cent and unit. So total number of multi-frame needs to produce to sell and break even is. Can you try this, Samrin? They're asking break even point. So fixed cost by weighted average unit contribution, right?
Okay, weighted average.
Yeah. Yeah, it's multi-product, right? You can try. Will you try or shall I do?
I'll try.
Okay. No problem. I'll do one. I'll again do, no problem. I'm waiting.
Budgeted unit sales they have given 1 lakh and 3 lakh. So we have to so I have to take
Yeah,
10% and 30.
yeah, you can take, right? Yes. No. First you should add them and you'll get 4 lakhs.
Yeah, 4
1
lakh
lakh,
divided.
1 lakh upon 4, 25, 75, right?
Okay.
What is the unit contribution margin?
6.5.
Sorry?
6.5.
No, just a second. Sales minus variable cost. 5.
Fixed overhead also we have to take, or as a direct material and direct labor.
No. Fixed we should not take. We'll get the operating income. Just a second. So we've got this. Just a second, I'm calculating. So composite unit margin. First X. Further data is given. Budget unit sales equal the current unit demand. So this is again the same kind of question what we saw, because The budgeted unit sales equal the current unit demand, and total fixed overhead for year is budgeted at this. And they are maintaining the same proportional mix. That means for every 1 unit of plastic frames, 3 units of glass frames are sold, right?
Okay.
So now we have to go for the calculation in that way. Composite unit contribution margin. Okay. So how we can go for composite 5 into 1 plus 7 into 3. Right? So how much you'll get? 26. Is it right? Hello.
Yes, sir. 26.
Yeah, so now 975 by 26. Why I took 26, you understood, right? Because the sales mix is for every 1 unit of plastic frame, 3 unit of glass frames, correct?
Yes, sir.
Multiplied the contributions with their units. Now tell me what is the answer coming here?
37,500.
Okay. So 37,500. Okay. Composite, how many frames? If I add both of them, the total number of frames will be?
4.
So 37,500. So now what I need to do, this is per unit wise. I have taken the composite contribution margin, right? Right. So this is for, this is just for what? Break. This is break even point, correct?
Yeah.
So the 4 frames should be there. They're asking what? Assume that company plans to maintain the same in numerical calculations, multi-frame rounds to nearest cent and unit. Total number of units multi-frame needs to produce and sell to break even. They need to produce and the total number of units they are saying. Okay. So if it is like, 37,500 just to break even. Okay. So the quantity should be 4 times, right?
Yes.
Totally to break even. Isn't it so?
Total. Yeah.
For both
Total.
the frames. Yeah.
Yes.
So 37,500 into 4. How much?
1,50,000.
Yeah.
Okay.
Yeah. Just make a note of this.
In previous question we did separately. Here for both.
Yeah, they're asking total to break even.
Total.
They're only for one product, I think they asked.
Yeah.
Yeah.
Yes, done, sir.
Yeah, next one. A company manufactures 3 products with the following characteristics: budgeted sales, selling price, variable cost, all are total, fixed cost. Assuming company's dollar sales mix remain the same. Again, they are saying this thing, dollar sales mix remain the same. There it was as per the unit. Here it is dollar, right? They're asking you the break-even point in sales. So total question is on sales wise. So can you try to find?
Okay.
Simple. What is the formula for break-even point in sales? Fixed cost by contribution. Okay, not per unit margin. Contribution margin ratio.
Okay.
So fixed cost, first of all, what is the total fixed cost? 27. Correct? Whatever, like 27. This is your total fixed cost. Correct?
Yes, total.
Yeah. So what is the total sales? You have to multiply this and tell me the answers. Multiply and add.
Add. Okay.
Yeah.
$69 million.
Yeah. Okay.
Hmm.
So we've got the total
Sales.
sales. Okay.
That's variable cost.
Total sales of 3 products. Yeah. And then what is the unit contribution margin? Right? These are unit contribution margin, right?
Right.
Now what we need to do, we need to multiply the unit contribution margins with budgeted sales units to find out the total contribution in dollars. So multiply this and this, this and this and this and this, and tell me 6,000 into 600 into 10,000.
6 million. $14 million.
Contribution margin. Just a second. Just a second.
Okay.
Yeah, hello. Yes, Amin. Can you hear me?
Yes, sir.
Yeah. So, so we were discussing. you can tell me the values of this. I'll write it here.
14 million and 12 million.
Yeah. So we got the total contributions as well. So all the three are ready. So first what we'll do is, as you know, this is a multi-product one, we'll add all the contributions. Okay. 26, 32, right?
Yes.
This is the total contribution margin. Now, what we need to do is, we need to, they are asking us the company's break-even point in units, right?
Yes.
So we have the budgeted sales units. So this is the total contribution margin. So what is the total sales? 20,000, right? 20,000. 10 plus 7, 17, 17 plus 3, 20.
Okay. Yes.
Now, can you tell me the average contribution margin is how much per unit? 1600, right?
Yes, 1600.
Okay. Now, this is what we got, the total contribution margin we took, and we took the total number of sales units. We got the average contribution. We'll find out the break-even point. So fixed cost by 1600 contribution margin. Tell me what is the break-even point?
16,875.
This is the contribution per unit, right?
Okay. Yes, sir.
No, sorry, break-even point per unit, right?
Per unit. Yes.
So this is what they're asking to find out?
Yes.
No. This is the break-even.
Break-even point in sales.
Yeah, break-even point in sales units. So we have found out the break-even point. Fixed cost by contribution margin. This is 16,875. Now, what we need to do? Sales. What is the total sales we have? 69 lakhs, right? So what we need to do, we need to take up each and every product's proportion in the total sales. With that, what we can do is, we can find out the break-even point. What we have found out right now is 16,875 is fixed cost by contribution margin. We've got the break-even point, but we have, see, this is like this is a multi-product one, right? So we need to see the each and every product's proportion in the total sales. Okay. What will be the proportion of this one in total sales? 10,000, this one into 1,000. We've got 10 million, right? That divided by 69 million. How much is that?
Divided by?
Yeah, just tell me 10 by 69, how much? 10 by 69 and then
0.144.
Yeah, 0.144. Yeah, so we will convert into percentage. 14.4%. Then second one also we'll find out proportion of product 2 in the total sales. 35. 35 by 69 is how much? 35 by 69 and 24 by 69.
50.72 in percentage.
50.72%, and this one?
34.78.
34.78%, right? Now on the basis of proportion of sales, right? We've got the proportion of sales, right? So we will take this and we will multiply with the unit contribution margins to get the that contribution margin, which we are going to divide with the fixed cost to get the break even point in sales, right?
Okay.
So this is break even point in units. We've got we've got 16,875 break even point in units, right?
Yes.
Yeah. But we are going to find out with the proportion of sales of each and every product in the total product. We are going to take that one and then we are going to find out the weighted unit contribution margin. Understood?
Okay.
So how are we going to find out the weighted unit contribution margin? We're going to take the contribution of each and every product. 600 into
Percentage.
14.4% plus what is the contribution of the second one? 5,000 minus 2,000. 50.72 plus 4,000 into 34.78%. Can you tell me the margin? Unit contribution margin?
2,49,200.
49.
2,49,000.
2,49,200.
200.
200. Okay. So now we will divide this 27 lakhs, which is the fixed cost, with the unit fixed cost by weighted average unit contribution margin. So this particular thing what we did was of no use. If we don't do this one also, it's okay. What is more important and relevant for us is fixed cost by weighted average unit contribution margin. So fixed cost is what we know that weighted average unit contribution margin is what we have just found out, right? 24,000, 2,49,200. Now, can you tell me the answer?
10.8346.
Yeah, if we take them in decimals, that's okay. We get 10,830. Okay.
Okay.
Better to take them in decimals. 0.144, 0.507, 0.3478, right?
Okay.
So that's what is the answer what we've got. Okay, so people will be confused with this. This is not the answer. This is just the normal. This is just the break even point, but they are asking us break even point in sales units. So we want to find out the proportion of sales, right?
Okay.
What is this 1600? What we've got here? 1600 was what?
Unit sales.
The contribution margin per unit. Contribution margin per unit. That will give us number of units. But here what we are looking here is break even point in sales units. Okay, based upon the number of units what we have sold. So we have seen what is the proportion of for that what we have found out weighted average unit contribution margin, because what is relevant for us in multi-product weighted average unit contribution margin, right?
Yes.
That is relevant for us. So we found out. Understood?
Yes, I got it.
7th one. Due to change in market conditions, a company finds that it can sell as many of each of its three main products as it can produce. So how much they can produce, that much they can sell. Which one of the following is most important in determining which of the three products to produce and market? So sales price less full absorption cost per hour of production time available. So best choice, it is like always important to check whether they can cover as much as cost they can, correct?
Yes.
So they should be able to cover the variable cost and also the fixed cost, correct?
Fixed cost. Yes.
So due to change in some market conditions, company finds that it can sell as many of each of its three main products as it can produce. Which one of the following is most important in determining which of the three products to produce and market? Sales price less absorption cost per hour of production time available. So best choice is the product that generates as much coverage of fixed cost as possible per hour of that scarce resource. So sales price less full absorption cost. What is the full absorption cost here?
Variable cost.
Yeah, see, absorption costing, what they consider is they consider the way they consider the under the product cost, what they consider is since we are dealing with production, right? They consider raw material, okay, wages, variable cost is definitely there. And when it comes to overheads, they take the fixed manufacturing overheads and variable manufacturing overheads, right?
Okay.
So sales minus that full absorption cost per hour of production time available. So here they did not like they have to recover the fixed cost. But what is that here? Sales price. Which one of the following is most important in determining which of the three products to produce and market? The product in which they are able to cover up maximum cost, that is better for them. So the product which can generate, suppose there are three products A, B, C, the product out of them which can generate some good revenue where they can cover up all the cost, taking into consideration the scarce resources what they have for that 1 hour is the one which is more important. But this particular is not giving that information to us, correct?
Yes.
Contribution margin per unit. So the product with the highest unit contribution margin may require greater usage of constrained resource than another product contributing a lesser amount per unit. That means contribution margin per unit of three products. We know that the one which is giving the highest contribution margin is the best one, correct?
Yeah.
But contribution, the product with highest UCM is the best one. But the precondition is they require greater usage of that scarce resource than another product contributing a lesser amount per unit. So the information is not coming out in this also. Contribution margin per hour of production time available and sales price per unit. Yeah, see, what is more important for us is what in that one particular hour, which product is giving us the maximum contribution margin is the best, right?
Yes.
So the criterion should be contribution margin per unit of the most constrained resource. See, what is the most constrained resource here? Any of the, see, they can have labor as a constraint. They can have something as a constraint. Constraint is something which they have in lesser, some resource which they have lesser. Taking into consideration that resource, which is giving us the maximum contribution. They may have some scarcity of some resource, right?
Yeah.
Considering that factor also, the product which is giving us the maximum contribution margin, taking into consideration that scarce resource, is the one which we'll be considering. Here, what can be that? What is that scarce resource here? Company finds that it can sell as many product of each of its three main products as it can produce. Which of the following is most important? Which of the three products to produce and market? The question is also not giving us maximum thing, but as they are asking much into this cost per hour and contribution margin per hour. So in that 1 hour, whatever the resources they have in that, whatever scarce resource they have, taking into consideration that also if they are able to generate higher contribution margin, that product we will be selecting. So this is giving us the clear picture of that, right? And again, this is not speaking about that particular. Because selling price does not consider the cost of constraints, correct?
Yes.
Cost and also the constraints.
Okay.
Yeah, next one. 8th question. A corporation is considering
The new product.
three new product lines, but can only invest in one of the three because they don't have capacity to invest in all three. Only they have to select one. Expected annual revenue and cost for each product line are shown below. All three product lines are assumed to operate for the same length of time. Recommend which product line the corporation should select to implement. So the one which is giving us the maximum profit is what we will be selecting, right? So
Yes.
if we have to find out the profits in all the cases, how we will find out? Sales minus variable cost minus fixed cost, correct?
Yes.
Gives us profit, operating profit, or whatever you want, you can say. Because sales minus variable cost is contribution and contribution minus fixed cost is profit, right?
Operating income. Yes.
Yeah, tell me which product is giving maximum. So this you have to multiply 1 lakh. This also you have to multiply 40,000. 1 lakh minus 40k
60K minus
minus 25. How much? 35, right?
Yes.
Here how much? Here how much? You tell me.
So this is my connector. Before that I wanted to show the configuration. Yes, that is what I'm showing.
60 minus.
So currently I'm hitting to
38,000 B.
Not working.
Same, sales minus variable cost minus fixed cost.
Okay, I'll try that also. If it is working, then I'll try that as well. So these are the headers I'm passing. Just the constant secret value. Okay.
15,000 C.
Just 15,000. So B is giving the highest, right?
Yes, 38,000.
Answer, yeah. So something like we will continue from the 9th question because the questions are very big. I think more 11 questions we need to do in the next class, right?
Yes.
If I'm not going tomorrow in the morning, I'll take up. I have some work. I'll take and I'll just go. I'll just finish this topic and go. Okay.
Okay.
Okay, Samlin. Just one class, and then we'll move to the next chapter. We will do some working capital, or we'll do pricing.
Pricing will start.
Yeah, because it is better to finish off the section, right? Yeah, marginal. No, we have to do marginal analysis. Okay. Then we have to do pricing.
Okay.
Okay, we'll see. First, we'll do pricing and then we'll go for margin analysis. We can do that. Okay.
Okay.
Okay. Thank you.
Thank you.